Hello and welcome to third part of this 3-video series where we are discussing what India's top fund houses are buying in current market condition. In the first part, we discussed top funds in flexi-cap category and investment decision taken as of February month. In the second part, we discussed top funds in mid-cap category and investment decision as of February month. In today's video, we'll discuss top funds in small-cap category and their investment decision. But before that, make sure you watch the first and second part. Alright, let's get started. Okay, let's discuss the third part of this video, that is small cap category. Before that, a quick disclaimer. If you are here only for stock name, please don't watch the video. Let me be very frank, because I always say that if you invest in stock market based on tips, you cannot create wealth on a sustainable manner. Because if you want to create wealth, you need to invest with conviction, and that conviction only comes with knowledge. Otherwise, if you buy based on tip, even a 10% correction will create panic. In fact, what we have seen in small cap, mid cap in last 18 months, a lot of people have probably exited. Those who invested without any knowledge. Right? So the idea is to understand the thought process of these India's top fund managers that are taking a buy-sell decision in today's time, not to give buy-sell call. Right? And in case you are a long-term investor who want to invest but do not have enough time for research, then you can explore my weekly video series, because I spend nearly 8-10 hours a day on the daily basis. Again, I don't give any stock tip here. The idea is to share my own investment strategy, the thought process behind buying or selling a stock, right? Apart from this, I track nearly 200 companies, their quarter results, because it's very important. That gives a good idea in terms of which companies are doing well, where are the buying opportunities, and so on and so forth. Okay, moving on, this important slide I have already discussed in detail in first part of this video. Here, let me just quickly walk you through. So first point is, I never shortlist a mutual fund based on last 1 or 2 years of return, because there is no guarantee that a fund has outperformed in the past, it will continue to do so. For me, most important thing is the investment style of fund manager. You usually have value style, momentum style. These are the two styles. I like value style, okay? Then on returns, you should not look at point in time return, always look at rolling return. Next, it is not just about return, it's always about risk adjusted return, and that's where you should look at Sharpe ratio and Sortino ratio. And finally, it's a combination of investment style, history of fund house, and risk adjusted return. Again, I'll repeat, if you want to understand this slide in detail, do watch first part of the series. Moving on, the first mutual fund that I want to discuss in small cap category is Nippon India Small Cap Fund. If we quickly look at the data, expense ratio of this fund is 0.67%, which is quite decent. You have got exit load of 1%. AUM, that is fund size, is around 67,600 crores. So it's quite popular fund in small cap category. Age is 13 year 2 month for the direct category. Regular category was launched on 26 August 10. So it's nearly 16 years now. Benchmark is of course small cap 250 and few other details. Now, if you had invested 10,000 rupee and SIP for 10 years, you would have ended up investing 12 lakh rupee. Your total corpus today would be 33.3 lakh, and that is after the correction, right? So the annualized return CAGR is 19.4%. Here there is something very, very interesting. If you observe the previous categories that you have discussed, like the flexi cap and the mid cap. So this is Parag Parikh Flexi Cap Fund. This is a large cap oriented, like 70% is in large cap, yet it has generated 30.8 lakh, right? A CAGR of 18%. See, if you, in fact, other also, if you look at it, we have discussed SDFC Flexi Cap, that also generated nearly 30 lakh. Mid cap has also generated, for example, we have covered a couple of mid cap names. One of them is SDFC Mid Cap, that has also generated 32 lakh. And now if you look at the small cap category, your Nippon Small Cap has also generated around 33 lakh kind of return, right? So the point I'm trying to make is a lot of people have this misconception that to create massive wealth, you have to invest only in small cap. See, small cap definitely generate much higher return as compared to large cap, but that happens during the bull phase. During bear phase, those small cap stocks also nosedive, right? So large cap may not give you that outperformance, but they also do not fall that badly. Right, so the point is, again, I agree that in the long term, small cap, mid cap can generate better return as compared to large cap, but then you cannot expect like crazy outperformance, maybe 1%, 2% kind of outperformance on an annualized basis. And this is a reality, right? I remember during bull run, nobody was interested in large cap, right? And I always used to say, remember to build a balanced portfolio. Don't get carried away, right? Majority of retail investors, during the bull run, they wanted only small cap, micro cap, right? So the point is simple. Make sure when you invest in a balanced way. Now, if you look at the return metric, returns are good as compared to category. Beta is okay, like category average is 0.8 and its beta is also 0.83. As far as risk-adjusted returns are concerned, like your Sharpe ratio and Sortino ratio, it is better than category average. So what is the difference between Sharpe ratio and Sortino? We have already discussed in detail in the first and second part. So I don't want to get into that. But all in all, this fund has generated a good risk-adjusted return. One very interesting part about this fund is, this fund has got more than 200 stocks. Right? So there's also a misconception that some of the people say that if you want to create wealth in stock market, you got to have a very concentrated portfolio, like only 10 stock, 15 stock. But this fund has more than 200 stock, yet it has outperformed. So my thought process behind this is that you can have as many as stock as you want, but then you got to able to track those stocks. Like you can't build a portfolio of 50 or 100 stock and then you don't have the bandwidth to track them, right? That's why it's good to have less stock, because usually a retail investor do not get enough time. But that thesis that only concentrated portfolio create wealth and your diversified portfolio does not, that is not valid. At least in case of Nippon small cap, it has busted that myth, right? So if you look at the your breakup between equity and debt, it's broadly equity. Within that, your small cap is 67.6%, remaining, so 2/3 is in small cap, remaining 1/3 is in large and mid, okay? Top sector, if you look at it, capital goods, very interesting. Financials, consumer staple and then services. Now, what are the top 4 holding? Out of some very interesting observation, first is MCX with 2.89% exposure, that is the highest holding, right? The biggest conviction bet is only a less than 3% holding. And that too, if you look at MCX, it is almost like a large cap now. Like its market cap is 66,000 crore, right? Kind of mid to small cap. SDFC Bank is second holding. It's already a mega cap. Karur Vysya is very interesting. A very good bank. It's kind of a mid cap kind of bank today, 27,000 crore market cap. And then you've got Apar Industry, which also is a decently cap company, now already 38,000 crore. So none of them really qualify as a small cap in their top 4 holding, right? But otherwise, the thesis is simple. MCX we have already discussed. There's a super cycle that started 2 years ago in commodity. That's why MCX has benefited a lot. This company had been underperforming for literally decade, and then in last 2 years, boom. Right? But then the question is, how long can it sustain? At least at the moment, the way your fund houses are buying, it looks like it is sustainable. They are showing confidence, but the only catch is it's not a cheap stock, right? The very interesting part is, in spite of this weakness in the market in last 1 year, especially this market weakness, stock is still near all-time high, right? So that is a very strong momentum going on. Apart from this, SDFC we have discussed. Karur Vysya is a great bank in small cap category, and Apar Industry is a play on data center. Again, we have discussed it. So I've done 2 videos on data center recently. Now let's understand what stocks they have purchased in last month, which is February. One is Apar Industry. They had 700 crore holding, added 280 crore, again not a big allocation, but 983 crore they have in their portfolio. Why Apar Industry? The logic is simple. It is a play on data center, right? Your cables as well as transformer oil, and again, data center is a massive theme, right? We have already recently discussed, I've done 2 videos where I've discussed the entire value chain of data center and each stock within that value chain, right? And the opportunity is massive. That I 100% agree. And it has been already there, right? It's since last 5 years that opportunity has been there. No wonder Apar has been a massive wealth creator. The earnings have grown, but then the stock has already jumped exponentially, right? Recently, it did fall during 24 period, and from there again it jumped. Valuations at P of 39 are not bad for the kind of growth company showing, but yeah, that is one stock Nippon has purchased. Infosys, again, a very small quantity, but that's like for a small cap, you would not expect a large to buy this kind of stock in their portfolio. Then Adani Port, again a mega cap company, although the quantity is small, but still it's there. Bharat Electronics, like the top 5 buying the top 4 buying out of these 5 stocks, they're actually large to mid cap names, right? Which shows that your Nippon small cap still does not have that confidence, or in general, your fund managers do not have that confidence to buy really small cap names in this volatile environment, right? So small Bharat Electronics is also small. Then there's this ESAB. I don't know. I don't track this company. They have taken some position in this, right? So these are the 5 names they have purchased. What did they sell? SBI, Reliance, HBD. So these are all large cap names. E-Clerk Service, so it's a BPM, Business Process Management Company, and MCX, small quantity, 2,200 crore they were holding, they sold 264. Not much change here. They've all, very small quantities they were holding, and they've made certain changes there. So that's the first mutual fund in the category. Second fund that I like in small cap is SDFC Small Cap Fund. This fund has generated 18% CAGR return since inception, and overall, if you look at it, expense ratio is 0.79%, exit load is 1%, AUM is decent at 37,000 crore size, age is 13 year, but then if you look at the regular category for the same fund, that was launched in February 2008. So quite matured fund, lot of experience. Then we look at the return in last, a 10,000 rupees SIP for 10 year investment of 12 lakh would have generated a corpus of 28.36 lakh at a rate of 16.4%. So that's a very decent kind of performance. As far as risk metrics are concerned, returns are better than average. Again, not a massive difference, but still better. Beta is again better. Risk adjusted returns, Sharpe ratio and Sortino, again better than average, right? So that's this performance. As far as your breakup is concerned, equity is around 92%. Within that, small cap is 3/4, literally 75% exposure. Next 10% in mid, and hardly 6.6% in large. Then if you look at the top sectors, services are highest holding, followed with financials, then healthcare, and then cap goods. Now, what are the top 4 holdings of SDFC small cap? First is Aster DM Healthcare. So that's a hospital name, right? Then you've got Bank of Baroda, which is a PSU bank. Then First Source Solution and E-Clerk Service, they are basically business process management company, kind of BPO, but then a bit advanced as compared to BPO, right? So these are the top 4 holding. Now what they have bought? First is Aster DM Healthcare. Quite interesting. The hospital name. I have recently done a video on entire hospital theme and why I like this theme. And there's already been a decent correction in the entire hospital stocks for a good consolidation that has happened, especially from July 25. If you look at it, there was this correction. Recently it has started moving up. Again, you can't look at the valuation, it's crazy high. Price to sale is decent. EV to EBITDA is also on the higher side. So again, hospital name are also not that cheap, honestly speaking. But then it is a massive growth story, entire hospital theme. It's recession proof, and of course it's going to be a beneficiary of AI advancement. Next, we've got Apar Industries. The reason is your data center theme. So a couple of names from data center theme that they've purchased. KEI Industry and Apar Industry. So cable and wire is one theme that they are buying. Then Krishna Institute of Medical Science and Aster DM. So 2 stock from hospital theme, 2 from your data center theme, and 1 from PSU bank, right? So again, the addition are not that high. Earlier they were holding 1,300 crore, added 254, another 400 crore Apar they were holding, added 161. KIMS they were holding 671 crore, added 157. Likewise, small quantity added in KEI and Bank of Baroda. What did they sell? Shoppers Stop, AWFIS, Sonata Software, E-Clerk, and First Source Solution, right? So this is the portfolio changes of your SDFC Small Cap Fund. So yeah, that's it from my side. Now let me know one thing, that we have discussed a lot of stock, obviously what they've bought, what they've sold. Now you might want me to deep dive into some of these stocks. So if you want that, let me know in the comment. Also let me know which is your favorite small cap fund. So that's it from my side. Hope you'll find this video useful. And what I'll do is, going forward, I'll closely track all these mutual funds, their monthly changes, and we'll do a video so that we can discuss further what fund managers are adding, why they are adding, where is the opportunity. That's it from my side. I'll see you next video. Till then, take care.